Ladies and gentlemen, the stock market for the Nasdaq 100 has officially gone into correction territory, and the stock market is going down very significantly. And does this represent an opportunity for us to invest? Where are the opportunities? Today, I will unfold some of them for you. Don't miss this video, and certainly don't miss the possible live streams and video to come. So remember, hit subscribe as we unfold all this for you. So the S&P 500 has hit negative 7% and the Nasdaq has hit negative 10%. So 10% is generally termed by the industry as correction territory. And the question really is, how low could it go? So today I will give you my insights and my studies from history, especially from the oil embargo of 1973. But let's take a look at the snapshot where things are. As usual, these are my disclaimers, and it's important for everybody to read through. And just to be very specific, I'm not telling you to buy or sell. Investment is a dangerous thing. So S&P 500 is now at 6,477. The peak is at 7,000 points. It's gone down by 7%. 7%, is it good enough, for you to invest in? Well, for those people who has been doing dollar cost averaging, I hope you are still dollar cost averaging down, and you maintain your dollar cost averaging, whether is it down or up. That's good. For those people who are thinking of starting your dollars cost averaging, have been asking me, you could consider, a time to start will be a time like this as well, but you must keep continuing for the rest of your life. Every week or every month you take a moderate amount of money out of your income and spend it on. That's called dollar cost averaging. Now, I just need to say here, a lot of people talk big, okay, dollar cost averaging and like it. In a crash like this, they all chicken out and refuse to continue. So, or continue less. So that's the downside of dollar cost averaging when human emotions are involved. The Nasdaq has gone down by 10% officially. This is the Nasdaq now. Because of the oil crisis, there is a potential for inflation to go up and suddenly interest rate go up. So the Nasdaq is hit more. So from a peak of 26,000 points, it's gone down to 23,000 points. So it's about 10% right now. So 10% is commonly termed as a correction. And could it go down some more? Is it going to be 15% down, 20% down, 30% down? No, I think these are questions that we all have, and let's continue to watch on. So as crude oil futures continue to go up, Brent crude WTI is all going up. Look at all around the world in our areas in Southeast Asia, oil is running out. Rationing has started in a few countries, and certainly even Singapore. The government will soon call out a conservation of energy campaign. So I think all these are signals that the problem is not over yet. And at this point in time, we have got President Donald Trump keep coming out with news to say, oh, we are postponing our strike. We are still having peace negotiation and things like that. Surprisingly, I'm actually very, very surprised that actually there are a lot of people who believe in him. After bitten once, twice, three times, and you're still believing in him. So I think this is something that you got to decide whether you want to believe him or not. Because every time he say that, the Iranians will say, no, 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 we are not having, it will not have any talks with you. You're having talks with yourself. If you don't want to strike me, this is your problem. I'm ready for a fight. Okay. So I think this is where the situation is. Dow Jones has gone down by about 9%, and that's quite significant as well. So basically S&P 500 minus 7, Dow Jones minus 9, Nasdaq minus 10. Okay, so I think this is where the situation is right now. Whether you should fire or not is really a personal decision, and maybe I'll give you my take at the end of the video. So interestingly, now there is a situation right now also in Middle East. You can decide whether you want to take on Middle East, buy the whole market as well. This is something that is quite interesting. It's called a UAE ETF. I don't even know they have a UAE ETF. It's gone down by about 20%. So this one is in a crash This is technically a crash already, about 20% down from the peak. Now, do you believe that UAE will ever recover from this one? Will after this whole episode, will all the rich people, all the rich Chinese, all the money, all the funds, all the regional headquarters, all start coming back to Dubai, Abu Dhabi, and so on? You gotta decide. Okay, so this is something that has crashed by 20% as well. So the STI surprisingly is very resilient, right? From 5,000 points to 4,009, not much. Okay. Now there are a lot of talks that says that, wow, look at Singapore, so resilient, nothing will happen to us. I think I think it's a right thing to say that we are very resilient. I think it's a long shot to say that nothing will happen to you. I think it's a matter of when. It's not a matter of will. If this thing were to drag on. Gold price have crashed by 22% or so, and will it continue to go down? Will depends on whether there is high inflationary risk and whether interest rate go up. If interest rate continue to have the risk of going up, then the gold price possibly will come down. And I did a video on that. I think you should all go and watch it. But this is a serious downside risk. A lot of people are asking me, Mr. Lu, I need to buy gold. Gold is going up. Gold is going up. No, now it's coming down. Would you buy? Right? Would you buy right now? Would you like buy when it's up? So you like to buy when it's up. Would you like to buy when it's down? Right? So let's start thinking about that. Now, this is very important lesson that I would like to extract from the 1973 oil embargo. The history of it was the Egyptians and the Syrians launched a pincer movement attack from the north and from the west to Israel. And Israel fought back. I won't go into the details of the war, but more important is that the Americans under Nixon, okay, President Nixon, actually gave a lot of weapon support to Israel. As a result, the Arab country got mad at America and decided to do an oil embargo. It started with a 5% cut in supply and gradually cut a bit more and more, and gradually just basically said, sorry, I'm going to start supplying America with oil. That is a serious kind of situation. By the way, it's not very far away from what we are going to experience or already experiencing right now in parts of Southeast Asia, but definitely not in US right now. So it's an oil embargo. That means totally no supply of oil to US, and that was a very serious lesson. But what's the impact on the stock market is worth an investigation. So this shows a chart in 1973. Okay, 1973, and this was the period of the oil embargo and the Middle East War. So the October War is also called the Yom Kippur War. Is I think for the Israeli is called the Day of Atonement. It's a Jewish holiday, and Egypt and Syria launched an attack, and concurrently, U.S. After a few days decided to help Israel, and the Arab countries go in and basically did embargo. So somewhere around here is the October the 16th where the war started, and shortly after that there was an embargo. Take note of this: the oil market may have some rumbling, but the stock market in terms of the S&P 500 did not crash. In fact, didn't even move down much. Okay, for almost 3 weeks. Almost 3 weeks, the oil market did not move down much, or for almost 3 weeks. Does that sound familiar? Why is it so? Okay, why is it so? Well, I think history is difficult to tell, but I think the most logical reason that I can think of is that many countries have oil reserves. It haven't run out yet. Okay, haven't run out yet. They have 3 weeks to do it and things like that. And by the way, that's similar to what we have. And a lot of people were also doing a wait and see. Why is there to be kanchong? There's nothing to be worried about and things like that. So that's why the S&P 500 at this period of time didn't move down by much, about 2 to 3 weeks. Now let me show you. This is another angle to the whole story in 1973. The oil embargo started around here, okay, around here. And for quite a few weeks, it did not go down all the way until somewhere around the first end of the first week of November. So in 16th of October, the war started, and so until here, 3 weeks, nothing much happened. Not that it didn't happen, nothing much happened. And then it starts sliding down, 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 down. When it hit 10%, okay, 10%, it was about close to a month plus. Okay, close to a month plus. So from the start of the war to the 10%, it took 1 month plus a bit, okay, to 10%. Now, our Middle East war so far, day 20 something, close to 1 month, not 1 month yet. It's 7% decline, not very far away from 10. That sounds more or less in the same ballpark, okay? And we are, of course, I would imagine that if I pitch it somewhere around here, which is the period that we're looking right now, day 26 or something like that of the war, it will be somewhere around here, which surprisingly would be about 8% as well. Strikingly similar, right? Interesting, interesting. So anyway, now somewhere around here will be a 10% decline. That's on the third week of November. And that's one month, 1 week or 1.5 months kind of period. And then you continue to decline, go up, decline, go up, decline, go up, decline, go up. So it didn't just go all the way down, 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 right? It just went somewhere around here, down, up, down, up, down, up, down, down, until somewhere around here. Okay, somewhere here you hit the bottom. Somewhere around here you hit the bottom. Somewhere around here it's a 20% decline. So from here to here, it was a 20% downdraft. A lot of people say, I wait until it's 50% drop, then I go in, right? So, well, I mean, it's your choice. I'll just say that in 1973, the oil embargo, okay, it was about 20%. And how long did it take to reach 20%? Well, to hit about 17, 18%, it took about 2 months plus. Then go up, down, 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 until it hit 20%. It was almost, a 1 month, 2 months, 3 months, 4 months to hit the 20% mark. Okay. And it just declined and declined, 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 declined. It took a very long time to hit 20%. I'm not even sure this time you hit 20%. It may even exceed 20%. I'm just saying that oil shock and oil crisis take some time for it to unfold. Why is it so? That's largely because oil is not the reason for stock prices to fall. Oil shock, which means a spike in oil prices, must first lead to inflation. Inflation will then trigger central banks like Federal Reserve to spike interest rates. So that's where the sequence of event is. So therefore, it takes some time for inflation to slowly fester and start being evident to show that it's coming out. And that's where the Federal Reserves and the banks would be more eager to raise interest rates. Raising of interest rate is lethal to stock market prices, and that's why this thing happened. So I think it's important for everybody to know why it takes so long, okay, to have stock market downdraft even in the event of oil prices. Now, the current oil crisis is not identical to that of 1973. So there might be nuances of differences. But what I'm trying to say is that look at it right now. There is some striking resemblance. Okay, it will not be identical, but it does rhyme. History does rhyme, although it doesn't repeat itself in a one-to-one fashion. Now, somewhere around here, the market rebounded. And why is it so? Because Henry Kissinger, which is the Secretary of State, if I'm not wrong, of US, then visit the Gulf countries. And basically, it's like, okay, enough, guys, okay? Enough of the nonsense. The war is overcome. Let's all do business again. And as a result, they lifted oil embargo and things went back again. Now, interestingly, the oil prices did not fall back to the original pre-war prices. It did not, okay? The oil prices stay at where they were despite the lifting on the embargo because inflation and prices are sticky upwards and very slow to come down. And further on, you will see the stock prices further come down, all the way to a negative 48%. But there were a confluence of many other factors, which is out of the topic today. I wouldn't attribute those factors entirely to the oil shock. So I think this gives us a very good picture of where things could be. Now you could decide, Mr. Lu, no, I would like to fire while it's coming down. That's one way, okay? You could choose to fire any path along this way. Or you could say that somewhere around here, you can start going in. There's nothing wrong with it as well. So key thing is participation in the long term in the stock market. A globally diversified portfolio is important. Now the entry point, okay, you miss by a few points. I don't think does matters, but I think it's important to continue to participate. Now, very few of us will be able to catch exactly at the lowest point. We are not God. We cannot tell the future, but we know where we are. If you feel that this is a level that it is low enough for yourself, you can decide. But I'm not going to give you a hard black and white advice whether it's time to fire or not to fire. But history does tell us some story. So, before I end, I would like to share with you what Warren Buffett has said. Okay, Warren Buffett has said this: "I tell you how to be rich. Close the door. Be fearful when other people are greedy, and be greedy when other people are fearful." Right now, people are fearful, and they are also manipulated by the stories and the narratives of Donald Trump. Okay, so there is a lot more upside, downside, that kind of movement. But I think it's important for us to make a decision. So you decide for yourself. But certainly the principle of being greedy when RP are fearful, it's an evergreen wisdom. Okay. For myself, I will only take on globally diversified portfolio. I will not stock pick. Okay. I'll certainly catch them on the way down, and I don't think I can catch the lowest point. But this opportunity, okay, is certainly one that spells out that that market crash, market corrections always come. Okay. All right. Okay. With this, you decide for yourself, and I'll see you in the live stream tonight, somewhere around 10 plus 11 o'clock. Okay. From a very unusual place. I'll see you, and remember, hit subscribe and goodbye.